Hello, I'm Catherine Bolus on behalf of the Talk Food and Ag Club and Center for Private Equity and Venture Capital. I'd like to welcome you and thank you for joining my panel on Beyond Banking, FinTech, and AgTech. Before we get started, I'd like to introduce our lovely moderator for this session, Connie Bowen. Connie is the Director of Innovation and Investment for AgLaunch, a farmer network based in Memphis, Tennessee. In this role, she's responsible for driving organization growth opportunities, building and growing innovation capabilities, and championing innovation to build a transformed regional food and agricultural economy. Prior to AgLaunch, Connie served as a founding executive director of the Yield Lab Institute, a think tank focused on enabling impactful agri-food innovation. Before starting the Yield Lab Institute, she served as a principal for the Yield Lab North America and Cultivation Capital, where she managed accelerator programming, deal flow, and portfolio, and aided in firm expansion into Ireland, Argentina, and Singapore. Prior roles also include operations manager for Grape Arbor VC, a multi-family office investing in startups and venture funds. Now I'll hand it off to Connie to get started.
Thanks a bunch, Catherine, and thanks for having us here today. We've got a really awesome group of panelists here that I'm excited to let all of y'all in the audience listen to and engage with. We've got Casey Richardson, Chief Credit Officer at Hello Tractor, Dan English, General Manager of Farmers Business Network Finance, and Alan Glazier, CEO and founder of Agroland. They're all going to talk a little bit today about their work in FinTech for ag. Each of these companies provides some version of a kind of financial inclusion technology product for farmers. You'll hear more about it shortly. The similarities in their products almost end there. There's really quite a range here. And I'm going to hand it off to everyone for a brief intro in a second. But I want to reiterate and encourage the audience to really engage here, ask questions, ask hard questions, make it a fun, interactive panel here. And yeah, without further ado, I want to hand it off to Casey, Dan, and Alan to introduce yourselves, please, and your organizations in that order, if you can. So, Casey.
Sure. Thank you so much, Connie. And like you said, I'm thrilled to be here. I'm honored to be speaking alongside these amazing panelists. But I am Casey Richardson, the Chief Credit Officer of Hello Tractor. Hello Tractor is the largest marketplace for farming equipment owners servicing smallholder farmers. The company was started because smallholder farmers, mostly women, they didn't plant on time. They were undercultivating their land. They were losing out on valuable income as a result of lacking access to labor and equipment that is critical in maximizing the productivity that you get from farms, right? So in comes Hello Tractor, and for farmers, we offer this booking app similar to Uber that allows them to pay for a couple of hours of tractor servicing rather than buying a complete set of equipment that wouldn't make sense for a small farm, and get that labor out of the way. We help tractor owners in that they can really make sure that they reduce downtime. They are in a marketplace of demand. We help cluster that demand, but we also give them technology for their equipment to make sure that fleet management, fleet health, right, monitoring their engines, their fuels, their servicing cadence, etc. It's really, really helpful there. And then dealers, on the other hand, we allow them to resell our equipment that allows them to increase their customer stickiness, which is really cool. So they can kind of see how well customers are doing post-sale, make recommendations around servicing, make recommendations around approaching things differently, right? So it gives them a huge value proposition. And then fourthly, you introduce pay as you go, where we are now increasing the supply of farmers. So what happens, right, when you've onboarded, so Nigeria is 70% of the market for tractors, and then you just don't have enough to meet the demand. Well, in comes PayG, where we increase the supply of tractors by building inclusive financial solutions from the ground up that allow tractor owners to pay for the equipment as they service farms and receive that cash flow in a way that does not have these crazy high interest rates, smaller, more frequent payments. And we use the app to de-risk, and we'll talk about that a little bit later. Or we use the technology to de-risk rather. So it's a beautiful ecosystem, providing value to banks as well as your traditional farming ecosystem.
Thanks, Casey. Dan, want to introduce yourself and FBN?
Yeah, so I'm Dan English. I'm the general manager of FBN Finance, which is the lending arm of Farmers Business Network. So for those of you who aren't familiar with FBN, we're a farmer-to-farmer data sharing organization that was started in 2014. We have about 27,000 farmers now across the US, Canada, and Australia. And our mission is really to power the prosperity of family farmers worldwide. And so everything that we do is focused on that goal of making farmers more profitable, improving their ROI, and driving down their costs. And so for my particular business, FBN Finance, the way that comes in is trying to have a low-cost lending offering that is typically cheaper, both in terms of fees as well as interest rates for as many of our farmers that we can. And we're focused here in the US, where we do primarily operating lines, land financing and refinancing, and equipment financing as well. And I think, one of the things that makes us a little bit different is we, similar to Casey, very focused on data in our decision making and looking at kind of real stats and real metrics. As opposed to, is the farmer well liked or something like that in their community. And so we really like our approach, and we've been able to save farmers pretty significant sums of money so far.
Awesome, thank you. And last but not least, Alan, can you introduce yourself and Agroland, please? Oops, we're having a little trouble hearing you, Alan. I don't know if you're muted, maybe?
Sorry, I was on mute here, I didn't notice. So first, thanks for inviting me, Connie. It's a pleasure to be here and share this panel with these colleagues here. So my name is Alan Glazer. I came from a finance background. I have like 16 years of experience working for banks and hedge funds, both in Brazil. I'm Brazilian and now based in Brazil, but I also lived abroad. I lived in Singapore, in Asia for almost 5 years. After 16 years, working in finance for hedge funds and banks, I decided to shift my career and together with other 4 partners, we founded Agroland. Agroland is a FinTech based here in São Paulo, and our plan is to fund farmers, small and medium-sized farmers in Brazil. Currently, those guys depend a lot on their state-owned bank in Brazil, Banco do Brasil, and they don't have many alternatives. The private banks in Brazil, they were just funding the very large farmers. So those like small and medium-sized farmers, they face a lot of challenges when trying to find funding for their crops, especially because the traditional subsidized funding in Brazil is a very bureaucratic process. So it takes a lot of time, paper to obtain the subsidized credit. And given the current situation that we have in Brazil, and all the fiscal issues that we are currently facing post-COVID here, the subsidized lines, they are not expanding. The government, they cannot fund further those subsidized lines. So right now, there is a massive problem in Brazil, given the lack of capacity to expand the subsidized lines. And we come here to kind of solve this problem. So we developed a technology, we have a platform where the farmers can basically ask for a loan in 5 minutes. We do the credit analysis in 15 minutes, and we can approve the credit on the same day. So it's completely digital. So he asks for the loan using like our mobile platform. It's a very fast process, no bureaucracy, and we come here to help the farmers in Brazil that especially now, they really need this kind of fast credit and without bureaucracy. So that's me.
Thanks a bunch. So as you can tell, we've got a pretty diverse group of technologies here. One thing that I want to define a little bit more clearly for the audience, there's a tendency sometimes to think about farmers as kind of all the same, and when in fact that is completely different. I want to give each of you a chance to kind of paint a picture of when you say farmer, who are you talking about? What does their acreage look like? What does their financials look like? What do they look like? Where are they based? And kind of that lends into the kind of also define, all three of you have kind of a boots on the ground presence to some degree, but it means something very different for each of you. So I'm going to go Casey first on this one.
Sure. Thank you, Connie. And I think that's a great question because even the lifestyle and the livelihood of a farmer in each geographic region can be vastly different, right? So I'll use my current case in Tanzania. I'm boots on the ground here, really researching the market, right, to understand who our end customer is. And you're talking about an environment where 67% of the population is under the poverty line, right? Living off of $1.25 per day on average, right? So when I go out and I really do visit farmers in Arusha, visit farmers in Iringa, I'm hearing stories of, this farmland has been in our family for generations and generations. So I do what's always been done. So they're not even educated on how to best cultivate their land, right? They're wary of spending money on technology up front because it seems expensive, because they don't understand that the 10 people they're paying over a 7-span day, and they're paying for meals, and they're paying, for the hours, and they're paying, even dinner before they leave is more expensive than what you would spend for 2 hours, right, of mechanization that gives you 30 days worth of work, right? So when I say farmers, I'm talking about your small farms, most times 5 hectares or less, right? Which can sound pretty fragmented, but what we do at Hello Tractor is we cluster the demand, right? So we work with co-ops and farming associations, et cetera, so that we can understand who already exists in their marketplaces, schedule those things, zone the region so we understand what's planted in each region, what climates exist at different times, so that we can then have our tractor owners, right, which are different from farmers, and have them serve those farmers cost effectively, right, optimally, et cetera. So I think of farmers as people that live in villages who may not have education around how to do these things, right, but with real conversation and really leading with empathy, they can become business owners, right? Today, they're not necessarily thinking about themselves as business owners.
Yeah, thank you for that. And Dan, why don't you go next? You've got kind of like quite a different farmer customer.
Yeah, absolutely. And I would say over the long term, obviously, our mission at FBN is to serve all of these farmers. But where we've really started out is focused on commodity row crop growers here in the U.S. And so typically 500 or 1,000 acres on the smaller side, most probably 2,000, 3,000, 4,000 acres in that range. Most of them are growing corn, beans, wheat. As you get further north and west, you might see some specialty crops like chickpeas or lentils or things like that. And then, over the last couple of years, we've really been growing in the livestock business as well. And so we would include both farmers and ranchers as part of our demographic, and so do a lot of pasture land, and then specialty crop growers on the West Coast as well. So blueberries, mint, almonds, vineyards, all of those things would fall in our purview.
Excellent, thank you. And Alan, you're almost somewhere in between, I guess I would define you, but I'll let you paint a more colorful picture of your serving.
Yeah, sure. So on my side here, basically, we have 3 very distinct groups of farmers in Brazil. The very top of the pyramid, the largest ones, this is not our target focus group in terms of here, the kind of farmers that we serve in Brazil. And you have the base of the pyramid, you have the very, very small farmers, the ones that plant just for having something to eat. And this is not the group that we are serving here in Brazil. So we are attacking the middle part of the pyramid here in Brazil. So the small, medium-sized farmers, they have all kinds of crops, mostly corn and soybeans, but we also have coffee, we also have flowers. It's a very, very diversified kind of crops. And they are spread all over Brazil, not here in the region of the city of São Paulo or Rio de Janeiro. They are more towards the countryside, the states in the central part of Brazil and in the southern part of Brazil. In terms of size of the area that they plant, we are talking about 50 to, let's say, 1,000 hectares. So that's more or less the size. In terms of revenues, the kind of farmer that we serve is someone with like between $50,000 per year to around $1.5 million per year of revenues. So this is the kind of farmer that we are servicing here in Brazil and all over, from the central part of Brazil, southern part of Brazil, in the southeast part of Brazil, more towards the countryside, so all over. And that's it. I think that's a good description of the kind of farmer that we have.
Excellent. Thank you very much. And so now I want to kind of transition to a conversation a little bit more about your farmers, kind of how your farmer customers are making money, because obviously in order for any of your products to work, you're having to think about your farmers end market. And I'm just to give you all a heads up, I'm actually going to use this as kind of a segue into a conversation around impact and sustainability, because I think that it's really critical that, it's very critical to really understand the role that the farmer's end market and income actually plays in some of these kind of impact aspirations that I think we in the agri-food tech industry talk about a lot. So I'm going to go to you first, Dan, to talk a little bit about how you're like the commodity market that a lot of your farmer customers are operating in. What does that look like? What are some of the constraints, and how does it impact the way that you're building your financial products specifically?
Yeah, so again, most of our growers are selling corn and soybeans as their two biggest crops, and so they're certainly making a lot more money now than they were a couple months ago with the run up in prices. But for them, it's typically, if you look 2-3 years back, when those prices were depressed, frankly, a lot of them weren't making a lot of money. And so, we had to really dig in and understand, what's the level of crop insurance that they have? What are their marketing opportunities? When will they be able to sell it? How much money can they make? And really make some, forecasts and some conservative assumptions around that. For a lot of them, our impression is that probably, a year ago, the best way for them to help their operation was to take costs out of the system. And so trying to buy, more inexpensive seed, more inexpensive chemicals, et cetera, being smart about using precision application on the fertilizer side. But they are relatively lucky in that for most of them that are selling those products, there's very liquid, corn and soybeans markets here across the U.S. And so, obviously you're going to see premiums closer to the Missouri River and the further south you go, and discounts as you get further north and west. But that's certainly factored into their land prices and other things. And so we can kind of go into the year knowing what that's likely to look like. During the pandemic, of course, as certain things got hit, or in previous years where there's been flooding, that can cause issues, and so that's continues to be something that we focus on. But particularly if a farmer has storage, the marketing tends to be something that we're fortunately a little bit less worried about. But the profitability is always obviously a concern.
And just one more thing, if I can push you on, Dan, you've also, it's my understanding, that there's also at least a subset of FBN members who grow non-commodity. And I don't know, are you accounting for that in kind of your financial products? And if so, how? And, I think that's an increasingly interesting problem to think about as relates to financing.
So, if they're not growing a typical commodity crop, what we really like to see is some type of offtake contract. So knowing that they have a place to market this, and they've, if they have some experience marketing it before, that is certainly helpful as well. There's a lot of regulations on hemp, which is growing as a crop here. We have stayed away from that in all instances, just because the contracts and the viability of those purchasers is a little bit more suspect. But it's absolutely something that we look at. And for a lot of farmers, actually switching some of their production over to some of those specialty crops can be a way for them to boost their top line. Likewise, if they can grow non-GMO corn, non-GMO soybeans, or organic, there's a set of regulations that go along with all of that, but the premiums are certainly there in some cases to justify that. So we would absolutely factor that in, but we want to know that, all right, they've got a plan for someone to actually buy this, as opposed to they've seen the price and haven't actually thought about the marketing of it yet.
Awesome. Thanks very much. Alan, I'm going to go to you next because you've got kind of an interesting blend here. And I'm imagining that you're relying on some aggregation points here. But yeah, talk to me a little bit about what your farmers' end market looks like and how you're accounting for that in your loan approval algorithms.
Yeah, sure. So as Dan mentioned, the higher soft commodity prices around the globe following the massive money printing that we've seen, it's impacting positively the farmers here in Brazil. But in addition to what Dan mentioned about the prices in dollars, for the Brazilians, the currency depreciated a lot. So a big chunk of the costs are BRL, Brazilian real denominated. So basically, with the currency depreciating and the prices of the soft commodities in dollars, with the costs in Brazilian reais, the farmers are increasing a lot the profitability. So they never made such a lot of money, and they never had such big profit margins before. So this is very helpful. And in addition to the pricing dynamics and the currency depreciation, what we've seen is the better use of agri-inputs by Brazilian farmers. So the productivity in terms of how many tons they produce per hectare has increased a lot. So from 2007 and 8 to now it doubled. So it's increasing massively. They are using better inputs, and the combination of a more depreciated currency, high prices of soft commodities, and this higher productivity has led to a very nice level of margins for the farmers. And also I agree with what Dan mentioned in terms of the land prices. The land prices also went up, very meaningful here in Brazil. So this is also helpful. So not only they have very good profit margins, but the balance sheet has improved. So it's a very good dynamic. And now following COVID, they are more willing to do business online. So this is something that is changing nowadays here in Brazil. So this is a new dynamic that the farmers are engaging in transactions in a more digital way. So basically we have farmers between 40 and 60 years old that would never touch a digital transaction before. This has changed following this pandemic. This is something new in Brazil, and we are learning how to handle this right now. So that's it on my side here.
Super interesting. And finally, Casey, you've got, I imagine, a complex set of kind of pricing variables that you're trying to think about regionally. How do you guys handle that, and how does it fall? Yeah, how do you handle that when you think about how you're, maybe you don't need to, but how does your farmer customer, what kind of level of information do they have about market prices? How are they going to market? And how does that impact how you can actually provide financing for them?
Yeah, you're right, Connie, in that it is a little more complex. At one, we're not lending to the farmer, we're not financing farming, we're lending to the tractor owner, right? But of course, we need to understand the income, we need to understand the crops that are being grown, et cetera. So one big thing that comes into play for us is route optimization, right, on the front end, right? So what we're able to do is we understand what the zones are, what crop is being planted, whether it be maize or soybean, rice, right, cassava, et cetera. And if and when things happen, if and when there's a disruption or a disease or any infestation or anything like that that maybe disrupts maize, we're able to use our tools to redirect those tractor owners to service a different crop, right? And we're very proactive around that. We're very proactive around diversifying the portfolio of farmer types that are in our marketplace so that we can do things like this. We've had a lot of learnings that have come out of just our work over the last 5 years, as well as I'll say even in the pandemic, right? Again, we're financing tractor owners, not farmers. But in the pandemic, you had a situation where there were curfews, right? Across countries, there were restrictions on movement even, right? So we had to be very creative in the way that we supported our tractor owners and think about, protecting the servicing that we needed to happen. We started leveraging things like Facebook ads. That is digital, right? It's very different from the marketing that you would typically do, but we got very smart around understanding the amount of rainfall, for instance, that needed to come down before tractor servicing season opens up, right? Before that market opens up. And we were able to time our marketing just in time for the tractor owner, including their booking information, including their contact information. And that really turned into some lift and sales for them. And we're going to keep that going. We have GPS tracking on all of our devices, for instance, right? So we know the farmers that are around a 10-kilometer radius, right? So as the tractor moves, we can pick that up. And again, on behalf of the contractors, right, do digital marketing for them and allow them to get hits, which optimizes, right, the servicing they can do in region. So we're not constrained necessarily, right, by a particular farmer's savviness or what they do in the end market, but we do try to, like I said, cluster demand, as well as be creative around how we can help these tractor owners generate revenue to pay us back, because they're paying as they go. The tractor needs to be moving. It needs to, we need to reduce downtime as much as possible to get revenue back. But yes, it is complex, and but it's been working out. It's been working out. I'd say, especially after the pandemic, in some ways that we hadn't previously thought. And during that time, I should say this, we were able to cover and service 670,000 acres of land, which is huge when you think about, the food service continuity, even for regions, et cetera. So, yes, quite a few things we do, and a lot more hand holding, I think, than you would typically think about. And the last thing I'll mention too is, for PayG specifically, we ensure that we pre-book revenue by getting anchor contracts in region with really big groups. The Clinton Foundation has a 17,000 farmer network, right, in Tanzania, right? Getting anchor contracts with firms like that is important so that before we even put a new tractor on the market, we literally know, right, how they're going to earn that revenue. We've anchored that on our side. So those are some of the things we do to mitigate risk and volatility and all that.
Yeah, that makes a lot of sense. I'm gonna throw this right back at you, Casey, and kind of like use this as a transition into the kind of impact sustainability conversation. I would make a case for all three of your companies that you're impact investments. I'd love to hear how you think about that, but I think specifically, and this is kind of what I was, specifically, Casey, I'm wondering how you take into account the farm operations and kind of their ability to be profitable, which is required for your business, so you get paid back, but it's also required from an impact perspective. Right? Like, how are you actually enabling these farmers to be more successful businesses? And that's where, in my mind at least, and I'm not sure, so you tell me. But you have to start to kind of tie in what realistically, where are your farmers going to be able to derive income as a result of their increased efficiency, and maybe it's a savings actually. So, do you mind talking a little bit more about how you're really broadly, how you're helping farmers to become more profitable businesses?
Yeah, absolutely. It's an important question. And I'll say, because data is everything, right? I think we do these things and we hope they work, right? But data really tells the story, right? So for Hello Tractor, our last commission net promoter research study that we had done, we actually scored an 82, which is really, really high. And this is on farmers, right? Like understanding the impact it's making, the revenue increase it's having, whether they even have other alternatives in their regions. Most of them say no, about 87% say no. And those that do have alternatives say they would still opt for our services. So there is a relationship that we keep with farmers and that we need to educate them, right, and we leverage agronomists heavily, I'll say, on educating them and re-educating them around the right ways to farm so that you kind of deviate away from the habitual farming that typically takes place, right, and really paint the picture for them and why this is better for them. And I'll say some farmers actually do buy our devices, right? You might have someone who does own a tractor and, we're saying, yes, this device is $110 and the subscription is $200. And their immediate reaction is, $310, that's a lot of money. I'm not paying for that, right? And so, and then in those instances, we have to literally sit them down, literally building relationships, right? Sit them down and explain to them what expenses are that they're already paying and juxtapose that against, right? This cost and the savings they'll make it in the number of turns. Again, data tells us whether we're being effective, right? Like once we have these relationships, we monitor this data over a number of years. We can see, you know, kind of their yields, because we can see how much their tractor is moving, et cetera. And some of them get into business of servicing other farms in their co-ops or in their families, et cetera. But it is improving, and we know this from even feedback and commission studies. It is improving their livelihoods. It is really, women have said, is actually giving them more equality in their marriages, and that they're bringing in income, right? And they're part of now financial decisions in their household. So there truly is impact. When you think about that, you're giving people mobility out of poverty, right? And again, we can't expect them, I'll even say we can't take for granted that everyone has a phone in their hands, right? We're talking about mobile payments and how accessible that is and inclusive as it is, but had Hello Tractor just said, yes, there's a booking app, everyone download it, that wouldn't have been enough, right? We had to have booking agents go visit these farmers, right? And they do it 100% of the time, right? Just to make sure that everyone understands the latest and greatest advances on these apps. The app actually measures the perimeter of their farmland, takes into account what implements are needed, et cetera. So I know it's a very long way of answering your question, but when you talk about impact, it's not just this is a woman, so we're doing great, right? Or this is a marginalized community, so we're doing great, right? It's these anecdotes that are important, right? It is getting that real feedback, and we're seeing that it is, and I'll say it's not easy in every region. Some regions can't even afford standalone to cover the cost of the fuel that the tractor will take to service their land, right? So what do you do in those instances? Well, that's where our partnerships with companies like 1 Acre Fund, right, or other, groups that can give grants to help subsidize these payments come into play, right? So we are relationship heavy because it's just very complex on the continent of Africa.
Yeah, no, thank you for that. I don't think a short-winded answer would work. So I appreciate it. And Alan, I want to let you talk next a little bit how your and feel free to weave in kind of the environmental impact side of these things too. But how by accessing loans, your kind of mid-sized farmer customer is able to succeed, and you can define that how you want to.
Yeah, sure. So we see the impact side of our business in two different ways. The first one is that we are financing the acquisition of better agri-inputs, so the farmer can increase his productivity and improve his margin of profits. So by making more money, he can buy more machinery and automate his production, and has, in the future, free more of his time to do other things. So that's one way that we see ourselves impacting the farmers. A second way is that we have a project here that we finance not only agri-inputs. We have a project here to finance automation solutions for the farmers. So by financing, these automation solutions, like many farmers here in Brazil, they drive themselves the tractors. So they haven't implemented automations for the tractors. So if we are financing these automations, it's not very expensive. We are talking about $30,000, $40,000 that we're gonna be financing for those farmers to automate the way that they handle the tractors. So by automating these, we can significantly improve the quality of life of the farmer and his family. So those are like the two ways that we see ourselves impacting positively the life of the farmers. In terms of the environmental issue, I guess that everyone nowadays is very concerned with the Amazon forest here in Brazil. As you may know, there are some regions where the soybean crops, they are just nearby the Amazon forests. Ourselves here, we are focusing on the southern part of Brazil. So we are very, very far away from the frontier with the Amazon forest. So this is the first point that I would raise. we are very far away from the frontier regions, so we can make sure that we are not engaging with farmers that could be kind of like making a damage for the Amazon forest. And also, like in terms of the environmental problem, we have a very deep solution to check if the farmers is compliant with the ESG regulation here in Brazil. So this is something that we take it very serious, and we have 2 different providers that can help us check this information. Our credit model is very quantitative. It's like a quantitative analysis, and we have different providers that help us analyze if the farmer is doing his job properly in conserving. Let's say in Brazil, if you have a farm, you need to preserve a specific amount of hectares inside your land, and we have a way to check whether the farmer is preserving that properly. And also we can check, let's say, indigenous land, like if there is any issues with indigenous land here in Brazil. This is something that we take it very seriously as well. So that's like our perspective in terms of impact and the environmental issue. This is a big demand. Like we are funding ourselves with very large hedge funds, even with the IFC. So the demand for having this conformity and following the ESG rules very precisely is very important for our investors. So that's it on my side.
Thank you, Alan. And yeah, I want to even highlight kind of your point about financing automation, but really what you're saying there is you're financing AgTech. I think that one thing that it's important for the audience here to realize is oftentimes one of the bottlenecks, I believe at least, to some of this AgTech adoption is understanding how the heck is the farmer going to finance that, and why does it make sense for them to do it? And that's particularly relevant in a lot of these kind of high impact sustainability, potential improving technologies. So that's really great to hear.
Point about that, Connie. Here in Brazil, the lack of adoption of agri-tech solution is not that the farmers, they don't want to use the technology. It's that they don't have money. There's no funding for them to buy more technology. So our view is that by providing funding in a proper way, they can access this technology. So I'm not sure about in the US, I think the situation there is very different, but that's the case here in Brazil. So they need funding to buy technology, and that funding is not available.
I don't think it's too terribly different, but I'll let Dan chime in on that to talk a little bit more about, FEM and impact, and play right off of that if you want to.
Yeah, and I would say, for us, and for our farmers, the funding is widely available, but because it is almost table stakes to be a farmer in the U.S. is to be able to have and manage large amounts of debt in order to get kind of any sufficient return on your equity and your time, which are still pretty low compared to a lot of other industries. And so, when we think about impact, the thing that we always start with is, of course, our mission to our farmers and making them more prosperous and sustainable. And so, that plays out in a lot of different ways across our company. On the finance side in particular, we're again very focused on charging the lowest rate that we can, charging the lowest fees that we can, being very upfront about those costs and what they are, and giving the farmer visibility to that. The other thing that we do that's relatively unique is we have a single nationwide price for all of our products. So it's dependent on your credit score and which program and stuff you fit into, but you can't call up your loan advisor or me and say, hey, I really would like to do this, but it needs to be five basis points cheaper. It's just, we can't do that. And so we give that best price up front. We think it mitigates a lot of the risks that other banks and institutions have on following fair lending practices and making sure that everyone's getting the same rate given their criteria. And so that's another thing that we certainly look at. And then, the last thing on the farmer front before I talk about environmental side for a second is, we've done, I'd say, to pat ourselves on the back a little bit, a great job of hiring people who have this mission focus at FBN. And so when we're making decisions about what product we're going to launch, how we're going to price it, how we're going to market it, that plays throughout. And if things get busy or folks are swamped or something like that, and you're kind of like, well, the farmer needs to get this loan approved because they have rent due, at the end of next week, and they need to pay this guy with a couple days. That's something that moves the needle, gets people to stay the extra hour, push something through. And so it's really that impact and being, providing a service to farmers and making them profitable that drives a lot of our employees. On the environmental side, that's, also very big. We have a separate business that's part of FBN Gradable that drives a lot of our sustainability initiatives. And so we're looking at ways to incentivize cover cropping, use of precision fertilizer application, switching to organic, and a lot of things that are exciting yet to come on that. But the way we're focused on doing it is, again, very much a data-driven way, and being able to quantify that impact based on the farmer's own data, and showing what the savings are on an ongoing basis for each of those farmers. So another area we're passionate about. We haven't been able to link it to the lending side yet, but we're working actively to try and get that up and running.
Thanks for that. I appreciate it. We've only got a couple minutes left here. I'm tempted to get into the data ownership conversation, but I'm not. We don't have time for that. Instead, I'm going to kind of double down on this a little bit. I want to go back to you, Alan. So you're working with a lot of input providers. A lot of those input providers have some form of a carbon program or practices transition program, sustainability. And then on the counter side of that is there's definitely, I think, fair probably criticism that in partnering with folks like input providers for providing financing, you might be incentivizing broader adoption of more chemical sales or something that could be viewed as environmentally damaging. So can you talk a little bit about both sides of that? Where there's opportunity there, and how you prevent negative incentives, I suppose?
No, we don't see it in that way. Let's say we see the usage of chemicals by the Brazilian farmers as a necessity. Like they cannot have a proper profitability level if they don't follow that path. So if they don't have a proper profitability level, they will not produce. So basically, Brazil is very meaningful in terms of soybean exports to the whole world. Like basically, the biggest potential for the whole world in terms of grain production is here in Brazil. So if the farmers, they don't have enough profitability, we're gonna have a massive food inflation problem around the globe. So basically, if you ask for the Brazilian farmers not to use chemicals and lose a lot of the potential profitability that they could have, we're gonna lose a massive volume production of food that we could have for the whole world if we don't use chemicals here in Brazil. So okay, I understand the issue of like partnering with the companies that produce chemicals, but the question here is that you prefer to have more food for the whole world available, or you prefer the Brazilian farmers not to use chemicals in their production and have like more food inflation that is already a big issue around the globe. So that's how I see the problem. We are financing farmers that need profitability, otherwise they just give up. They will not plant, and then we don't have enough grains for the whole world. So Brazil is the land of opportunity. Here is where the growth of the food production, you name it, either on the protein side, on the grain side, you name it, all kind of food is kind of connected to the Brazilian chain. So if you want to have growth in the food production chain around the globe, you need the Brazilians to be very productive and profitable. Otherwise, they just give up and they don't go ahead. So if they don't use chemicals in the same way that is used around the globe here, this is not a solution that we need for the world. So that's my take. I don't see it as a negative way partnering with the agri-input companies. For me, it's positive, because that's the way for us to bring more food to the world, and it's the price to pay. So you don't want them to use chemicals in Brazil. Okay, they can use less chemicals. If you have better technology, as Dan mentioned, if you can monitor the amount of chemicals that you are applying for each part of your crop, and with technology, you can use less chemicals. But I don't see a problem partnering with the chemical companies here in Brazil.
Fair enough. Thanks, Alan. We've got about 10 seconds here, and I know we're going to switch over. So I'm going to use this time to say thank you for joining us. Thank you, Casey, Dan, Alan, for your insights today. And yeah, we really appreciate this. Has been a fun chat.
It's been a pleasure.
Thank you.
Thank you, guys.